The aim of a management accountant skilled in cost accounting is to generate value for the company, to optimize production, optimize profitability, to make the company the best that it can possibly be. And as we just talked about a minute ago, it's a procedure to go through to get that information, work that information, and make good decisions. So it's going to require your data people to collect all of that data and put it into some kind of context where information can be extracted easily. It's up to a management accountant to extract that information and obtain knowledge from that information and then pass along to the ultimate decision maker, management, their findings, the knowledge that they've obtained about the particular question they're looking to answer. And this is not one singular step. This is not one question that gets answered and it's done with. Business is cyclical. You do the same thing over and over and over again. So perhaps you are going to be asked a question, and as the management accountant, you're going to have to go through, find the data that you need, master that data, get exactly what you need, perform an analysis of that data to come up with the answer to the question, and then convey your findings back to management. And management will get that, and I bet they're going to have another question. And you're going to have to go back through again, work the data one more time, analyze it, and then share the story. And as things go on, this never stops repeating. They call this the AMPS model. Ask, master, perform, and share. Repetitively, this is just going to go on over and over and over again in the day-to-day operations of every management accountant in a firm. Let's put it into a real-world context here. It will be Cisco. We have a bunch of Wi-Fi routers that we make, and in particular, we have one that's cheaper than the others. And management is saying, should we continue to keep producing this in-house, manufacturing it ourselves, or should we find somebody else to make it for us that we can outsource production to? Well, what's the big question that always gets asked in every business? How is this going to affect our profitability? If we outsource, is it going to allow us to obtain that router cheaper? And if we sell it for the same price, make a bigger profit margin. Well, what are we going to need to know to figure out whether it's better to make it ourselves or have someone else make it for us? We got to master the data. We got to get the points exactly that we need. As in, if we make it ourselves, what do we have to pay in materials and labor? What overhead are we going to incur on each router, and how much is it going to cost us to distribute these routers to the retailers, presumably, that sell it for us? That's information for the internal end of this if we make it ourselves. But what if we outsource? Well, we got to go and we got to find some kind of projection on how much we're going to get charged if somebody else makes the router for us. And there could be variance in there as well. A lot of people will give you a discount if you buy in large quantities. So it's maybe not just a per unit thing, but it's on a scale. If we buy X amount of units, how much is each unit going to cost us? Maybe we got to pay for shipping to get them sent to us before we redistribute to somebody else. That's going to change. Shipping's going to be more expensive the more units that we get. So we need a whole bunch of information to work to make a projection on how much the quantity we need is actually going to cost us. And then with all that information mastered, if you will, that we need, we can perform the analysis. We can go through and we can figure out what if, what happens if we outsource? Is it going to increase our profitability based upon our projections from the information that we're working with? And then even to that, all things being equal, we might have made a bad estimate somewhere. It could be any one of those data points. Materials cost more than we thought they were going to be. We didn't, if we wanted to manufacture internally, we actually don't have the production capacity to make as many as we needed. We got charged more for shipping. It doesn't matter what one of those points it is, but maybe something would be awry. Well, that's what sensitivity is based upon our projections. How bad is it going to be if we miss? And we pass that information along to management as well. And how do we pass it along? We share the story. Nobody wants to get bombarded. I'm sure every student in here is thinking the same thing with 5,000 data points that seemingly are interconnected. If you're conveying your thoughts to someone else, it should be in a very brief description that gets right to the point of what you want. And they say a picture is worth 1,000 words. Nothing conveys information easier to people than data visualization. For example, if we were trying to compare our sales to another company, a bar chart is an easy way for someone to look at that and see that real fast as opposed to a written paragraph. If we're trying to figure out how the different components of our business are affecting our profitability, you can have a pie chart with the portion of your company's overall profits that were created by each one of your subcomponents. If you're looking for some kind of measure of variance in the manufacturing process, and how long it's taking you on average to make a unit, well, you can have a histogram that has the process time for a bunch of different units, and you can figure out what portion of your units took you way longer to make than is typical of your business. What's the trend that you have? The trend analysis. Is your revenue going up over time? Sounds like a pretty good time for a line graph. And if you're looking to see how one thing affects something else, a scatter plot's a good way to go. If we advertise more, we should be generating more revenue. So how is each additional dollar of advertising expense affecting our company's overall revenue? And that scatter plot will show the relationship between those two. And it's much easier for somebody to look at this in abstract meaning just from this visualization than it is from paragraphs of writing. So it's an important part of a managerial accountant to know not just how to work the data, but what is the most effective way to convey that data that's going to make it easier for the person that's making the decision ultimately. And to do this, we're going to have different types of questions that we have. Sometimes you want what happened? How long on average during the last month did it take us to manufacture one unit of product A? That's a descriptive analytic. It's looking in the back and describing what actually happened in the past. That's just summary data, if you will. If you're trying to figure out, okay, if that's how long it took us, why did it take us that long to make stuff? That's diagnostic analytics. It's looking into the past and not figuring out, okay, what happened, but why did it happen? What were the reasons that our production time was longer than we thought it was going to be? And you can work a bunch of data to figure out what the different, factors that went into it had to do with our overall production time. Looking forward now instead of the in the past, you need to make predictions on how many units you expect to sell of a new product, what you think your revenues are going to be in the future, what amount of dividends you're going to have to pay your shareholders to make them happy. That's all predictive analytics, going through and looking, okay, based upon what we are estimating right now, can we find a way, very important word here, to forecast what is going to happen in the future? And then, taking that a step further, you have prescriptive analytics. If you expect all of this to happen, if this is your prediction, how do you make it happen? What should you do based upon your expectations that will, another very important word, optimize your performance? What is the pathway to the maximum amount of profitability and maximum benefit for all parties involved that we can get to? So this is recursive. And this just happens over and over again every period. It's not going to be one particular line that you have. It's going to be over and over and over again. And the more you do something, as we all know, the better you get at it. So just because you used a certain methodology to make a prediction in the past doesn't mean that's the only methodology you're ever going to use. If you made a prediction and it was off, you're going to ask yourself why it was off and how do I refine this to make a better prediction in the future? So it's not just a loop of continually answering questions, it's a loop of improving the process by which you use to answer those questions as well. So as a management accountant, skilled in cost accounting, the big chunk of your job function is going to be to plan and to control, to make predictions on here that you're going to have after a question is asked of you and you go through and you do the analysis and set everything up so people can operate in what you truly believe is the best way to operate. And then afterwards, you get your actual results. The period passes and things actually happen. You made sales, you provided services, you paid costs, all that stuff. Going back through and looking at what your performance was and what you need to tweak. How do you change your operations? How do you change the models that you're using to make predictions? So it's a constant cycle of planning, handing it off to someone else to execute, and then taking the results of that execution and controlling and making a better plan in the future. A bunch of the information that you're going to work with is not information that is required by any law, regulatory agency, anything to be passed along to people. Mandatory information is the realm of financial accountants, things that every publicly traded company needs to tell people is what amount of profit do we have? What assets do we own? What debt do we have on our books? Well, how's our cash flow looking, etc. It's your financial reporting under the rules of GAAP to other parties. Well, as a management accountant, you're not in the realm of passing along information that's mandatory to anybody outside the party. You are going to deal with discretionary information. It's information contained within the organization that helps you make the best decision possible. Now, I'm not saying there's not points where you're going to be looking at that mandatory information and being, okay, how is my decision going to affect our income statement or our balance sheet? What I am getting at here is you're going to have a bunch of information that will never leave the walls of the business that you work for. Best way for me to describe this is, let's say I was thinking about investing in Tesla. Tesla sold cars during the period. I, as a potential investor, would not care about any of the demographics of the people that actually bought the cars. I would only care about did they make profit off of that, as they reported on their income statement. Can I expect that profit to be repeatable in the future? Therefore, watching Tesla grow. But people inside the company definitely want to know who their target market is because they can further refine, differentiate that car to sell to the people that are interested in buying a high-end electric car. So the management accountant would want that demographic, the discretionary information to help optimize the business, whereas a potential investor would only really care about the profitability that happened. So as a management accountant, you're dealing with all of that other information you don't need to share to anybody else. And what you have to do to become a high-end management accountant? You're going to need some kind of certification. And as of now, there are two different agencies with two different certifications that get passed along. The first one is becoming a CMA, which is the term that has been around for a while. It's a certified management accountant that's skilled in all of these techniques of working discretionary information inside of a company to help make decisions. And this has been around for a while, and it has been uh, the test and the requirements have been conducted by the Institute of Management Accountants, or the IMA. It's been around for years and years and years. Well, those were internal accountants. Public accountants tend to deal more with information that has to be shared, but they do a ton of consulting for agencies. And the AICPA, the American Institute of Certified Public Accountants, have decided that they are doing so much consulting for other parties coming in and helping them look at, they probably need the management end themselves. So the AICPA has recently instituted their own certification called the Chartered Global Management Accountant, or the CGMA. They're both pretty much the same thing. They're just offered by two different agencies. So one you would get if you're planning on working purely for another company as a management accountant, where one you would get if you wanted to be a CPA who other people could hire to have you come in and consult for their business in terms of how their management operates.